All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. All right, guys, so Bitcoin was seeing a bit of a small pullback all day yesterday as we were coming down to backtest our general value area high in the pitchfork band. If I turn on our fixed range volume profile, you can see, at least on Coinbase, the value area high is a bit higher than the pitchfork band, but it was also kind of this area of the anchored VWAP from our 74K highs. And the anchored VWAP is important because it's kind of your trend volume resistance. Now, we have chopped quite a bit through it and quite a bit into the volume profile. We did front run the point of control of the range, but we did see kind of taking out of the lows from Tuesday's lows. Actually, it was kind of, yeah, it was Tuesday's lows. We came down, we took out Tuesday's lows this morning. And then we saw a pretty nice push to the upside, local push to the upside today. But not a lot has happened with Bitcoin. And one of the things I'm looking at within this bigger range is I still do think this is far more likely to be that corrective range before overall dropping to the downside and taking out the range lows of 60K. But within this corrective move, so what we diagnosed earlier in the week throughout the live streams, that this was more likely to be an impulsive push to the downside. 1, 2, 3, 4, 5. And because of that, we're expecting a lower high on the charts before seeing that big breakdown potentially. And within this push up, one of the things that I did talk about in yesterday's live stream is I don't really like how this push up here has been kind of an aggressive straight up push to the upside. It just doesn't look like the slow, grindy correction that we would want to see coming up to create that lower high. But if we look at this now that we've pulled back all day yesterday and kind of we're making this potential corrective move, what we could be looking at is this is an A wave here. We are getting that 3-wave corrective move down for a B wave, which means we would expect to come make new local lows below today's low, possibly actually hitting the point of control. Maybe it's just going to be that SFP of today's low. And then coming up for a C wave where we would expect to still kind of come up and reject from the general area of resistance above us, which is the next big area that I'm going to be looking for that short position, because this short position could end up being a really nice short position if a wave 3 plays out to the downside. And so for now, locally, I haven't really taken too many trades on Bitcoin today because we're just chopping at our resistance and we're not really seeing a strong rejection. We're not really seeing liquidity grab or anything like that. So I'm looking for those liquidity grabs. I'm looking for naked daily points of controls, things like that within this range. And also, I did say we were seeing some bullish CVD absorption earlier today on this push to the upside. So because we were seeing some bullish CVD absorption, I'm not looking to short yet. If we do see that 3-wave move down, so we did get that, high yesterday, the low this morning, and then the high this morning, we can see that 3-wave corrective move, the targets between the 1-to-1 and the 1.236. The 1-to-1 is pretty nice because we do have some local lows. Let me go ahead and zoom in onto the half an hour chart here. We do have some lows in between there. I guess you would be more coming down towards that 1.236 to kind of take out these lows in here of this flat correction that we saw. But I'm honestly just not too interested in trading any of this. If we do start to see that little mini 5-wave impulse come in, then I might look for a scalp long in this opportunity to take out your local longs from Tuesday. But other than that, not too interested in anything. If you are looking at scalping because the price is pretty slow right now, then let me go ahead and turn off this range that we've been in for 5 weeks, and we can look at what this pitchfork band. So this pitchfork band has been pretty crucial within this range. Let me go zoom out to the hourly chart. Within this range, this pitchfork, I'll do 2-hour chart so we can even get a better look at that. The pitchfork band is this upper green band here is the top of the pitchfork band. The dark green band, trend line is the lower part of the pitchfork band. And you can see at the very beginning of the range, that lower part of the band was really giving us some tough resistance, even here. So 4 times we kind of rejected from that lower band before finally breaking above it and coming up to that 0.5 Fibonacci and anchored VWAP. But then we lost it in this impulse to the downside that occurred over the weekend. And we have been able to reclaim the bottom of that pitchfork band, and we're kind of holding it as support now. So that's what I want to highlight. Now that that was acting as resistance for most of our range, we have been able to reclaim it in the past couple days, come down to it, and kind of flip it to a support locally. And I often say on my channel, within these pitchfork bands, you do form ranges in between the pitchfork bands. So could we be looking at a range here that forms for a bit, or, you know, maybe another fake out to the downside and then that push up to the top of the pitchfork band? But the top of the pitchfork band is an area that I am looking for that rejection at. We do have quite a decent amount of confluence up there. So if we look at the last impulse down that we saw from 74K to 66K, our 786 Fibonacci is going to be coming in right around that pitchfork band top. We also have a daily level at 72,680, let's say. And then we have a naked daily point of control up there as well. So we do have a decent amount of confluence here for a lower high being put in on the pump up since the weekend, a lower high before seeing that big reversal and dump to the downside. And then also we could be setting up for some really nice bear divs. If we do get up there, if we kind of see this 3-wave corrective move down, make a higher low, and then we have one more little mini impulse showing that bigger A, B, C corrective move, that would first of all give us our zigzag corrective move. And I would want to be looking for some bear divs between the 72K highs or the 71,800 highs and then the new highs that we're creating. And we could very nicely set up for that. If we do see a move down, take out the lows, we get that, and then we get another rise up here, we could be setting up some very nice bear divs on the chart as we're coming up into this resistance. And hopefully by then your money flow is now kind of rolling over and crossing back into the red. Now this is on the 2-hour chart. If we do zoom out to like the 4-hour chart here, on the 4-hour chart, you can see we already have potential bear divs, but we need to take out yesterday's high to actually confirm those bear divs. And NAMI as well showing potential bear divs, but we want to see a little bit of a push up here to kind of hit into this resistance because we front ran that resistance here. And the high that we saw on Tuesday, it was kind of a wonky high that was in between the golden pocket. You can see we kind of pierced and traded for a little bit above the golden pocket, but it wasn't quite to our 786 Fibonacci level yet. So that is an area where I'm looking to, that's kind of the plan that I'm watching for, to see this kind of 3-wave corrective move come in before seeing one last push up, giving us that bigger zigzag correction to the upside before a possible big dump in a third wave. So it would be a wave 1, wave 2, wave 3, and so on and so on. If we look at just the little range that has been occurring, so this is what I wanted to talk about, the range in between this pitchfork band that has been occurring for the past couple of days here. So if we zoom in onto the 30-minute chart, you can see we can establish a range based off of the pitchfork band was acting as resistance for a while. And then finally, once we broke above it, we flipped it to support. We've back tested it many times locally. We just had that small deviation this morning with the news, with the CPI news. But other than that, this kind of area in here is a sideways range that's forming within our pitchfork band. So we can analyze this range and we can just scalp within this range with proper position size, with proper risk management, because we could see a breakout or a breakdown at any time. But if we analyze this range, this is kind of the range that I'm looking at here. And Bitcoin pretty much moved up to the value area high of the range. And quite a few times we tried to break above the value area high. 1, 2, we got that fake out of it here. And then we fell back inside the range, back tested the point of control, and we're dropping. And we're even losing our VWAP for the day. This darker blue line is the VWAP. So could we see a rotation down, at least very locally, down to our value area low, which is going to be around 69,715. And then if we pull our golden pocket from today's low to today's high, you can see the golden pocket's resting right around there. It's with your your anchored VWAP from the 74K highs and just below the value area low with that liquidity. Let me zoom in onto the 15-minute here. So kind of grasping at straws, guys, because the price action's been kind of slow and boring and minimal. But you know, we might see a small bounce from this general area. We have that liquidity in here from earlier today. That was today's lows, or not the lows for today, but that higher low for today. And then we could even look between the golden pocket and the 786. And in some ways, I actually do like this 786 a little bit better down here around 69.5, because it would take out the liquidity. It would pierce the value area low. We would bounce from that pitchfork band once again, and I would want to see like an hourly candle close at or above the value area high. And that would be a signal for me to take a scalp long, at least to back test. You know, I'd probably be looking at back testing the golden pocket and the POC. But really not really interested in too much here. I actually, some of the altcoins have a lot better opportunity, and I talked about this in yesterday's live stream. Just a lot clear trade opportunities that were open, and we were focusing on Ethereum and Solana generally. But for me, Bitcoin, it does look like we are starting to get some exhaustion in this push to the upside that we saw from Monday and Tuesday. We're starting to get some exhaustion. We're starting to chop around within this pitchfork band. One of the things that I do want to warn about, though, is if we are going to see kind of that three-wave corrective move, we do need to watch out for an impulse. Instead of an ABC, like an ABC rejecting from that 786 area, we do need to watch for an impulse, because we do cover both the bearish and the bullish scenario. So I'm not setting any limit orders in this area. I want to see bull divs locally in the impulse, in the C wave impulse. So if this is an A, this is going to be a B where we take out the lows again, and then a C. Within this impulse, I want to see local bull divs on like local bear divs on like the 15-minute and under. And then I would want to see some intermediate time frame bear divs between Tuesday's high and whenever this high comes in here. And that would give me the signal to look for the short, or to enter the short position. Other than that, there's not really too much to talk about here with Bitcoin, guys. Not a lot has happened today. Yes, we are back inside the pitchfork band, and we could form that range in here. So maybe I'll do some scalping within this range if I do see some good local opportunities. But for now, I'm kind of just sitting on my hands and waiting. If we look at our open interest here on Bitcoin, this is a 15-minute chart here. Open interest, we did get kind of a nice aggressive start. This push up that we saw from the lows this morning, and this was right after CPI came out, we did see a push up. It was a pretty aggressive and healthy move to the upside in here, longing pretty much the CPI news. Then we just saw a little bit of a drop, back tested the VWAP, held the VWAP, made new local highs for today, taking out the local highs for today, and then we've been just chopping sideways and down. And chopping sideways and down, and one of the reasons why I do think this range could continue, I'm talking about our very local range inside the pitchfork band could continue here, is because if we look here, this move down is on a pretty aggressive drop in open interest, and it looks a little bit choppy and corrective to me. So could we come up in SFP the highs? We were still seeing the bullish absorption on the charts. So if we look at, where's that at? Let me get that CVD. From the lows of the weekend. Now, from the lows of the weekend, yes, we still do have potential bullish CVD divergences. You can see higher lows in the price action, lower lows in the CVD, but it's also on a pretty big decrease in open interest here. So that's bullish CVD divergence, and also with your open interest being so wonky, ups and downs in here, I'm not paying too much attention to that. But if we look at the lows from earlier this morning, let me go ahead and get rid of this. If we look at the lows from earlier this morning, we are creating some bullish CVD absorption still. So you have that low. We are right now making a higher low. If you look at your CVD right when we were at that low, your CVD was here. So we are making lower lows, just not aggressively, but we are making lower lows. And if you look at where your open interest was when we were at that low, your open interest was in this area. So we are making higher lows in the open interest, or open interest is rising. But I do not like the way it is rising. If we were seeing a slow, consistent, steady rise, that would be a nice signal for bullish absorption for me. We saw this aggressive rise followed by a pretty aggressive dump here. And I talk about this on the channel a lot. When you see these prolonged dumps in open interest after a pretty steady rise, it does tend to invalidate the local bullish absorption. So is there a possibility the bullish absorption does not play out and we do get that dump to the downside, kind of creating that three-wave move? Yes, I do think so. We could get that bigger three-wave move down to take out today's lows and maybe come sweep some of this liquidity in here. But because we do have the bullish absorption, it's not technically sound bullish absorption, but it is bullish absorption. I am not going to be shorting because of that. So once again, it's kind of a sit on my hands and wait, no trade zone for me because of that. Also, we are above that anchored VWAP from the 74K highs, or, you know, what is that? Yeah, $74,100 highs. We are above that anchored VWAP. We lost it a little bit overnight, and then we were able to get back above it today. And, you know, now it could flip to support locally again to continue up, to even take out yesterday's highs. So, yeah, no trade zone for me. Let's look at our liquidity. So very locally, if we look at the past couple of days, very locally, we do have some liquidity that is above us that's going to be resting above those highs from Tuesday. You can see that liquidity resting in there, coming up to about that 72K zone. And then below us, we really don't have that major liquidity until we start getting down into like the 67s and mid 66s. If we look at the past week of price action, that would include the weekend dump that we saw. In that weekend dump, you can see with most of that weekend dump included, really our liquidity is above those Tuesday highs at 72K. So because of that, that liquidity is going to be acting as a magnet to come bring us up there. And that is why I am looking at a potential three-wave corrective move, making a higher low before coming up and grabbing that liquidity into our resistance zone. And then we would like to see that dump after that. So that's what I'm going to be watching for. If we do start to break through our purple box of resistance, that naked daily point of control, the daily level, the pitchfork, and the 786, then I'm pretty much going to be looking to finally come up and take out those highs that were from last Wednesday, a week ago. And remember, on Coinbase, when we had those highs last Wednesday, we front ran the Coinbase anchored VWAP. Some exchanges hit it, some exchanges didn't, but I follow Coinbase anchored VWAP, or Coinbase volume levels, and we did front run it. Now the VWAP, the anchored VWAP, has become a little bit lower. It's come down a little bit lower in the past week, but it could still act as kind of a nice double top area. So if we are going to get that push up here, kind of double top, grab liquidity from last Wednesday's highs and kind of pierce above that anchored VWAP and then close a 15-minute or an hourly candle below the anchored VWAP, then I could look for a short off the swing failure pattern here. And we will keep an eye out for that. I'll set alerts. Actually, we can set an alert here. I think I already have one hidden, but we're just going to make sure. So we'll set an alert there, and I will let you guys know in the Telegram if I do end up taking any trades on Bitcoin. Now, speaking of the Telegram, and just taking a second to shout out the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some pretty large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade within the futures markets. And they have some of the best initial deposit bonuses I've seen of any exchange, period. For instance, if you deposit $100, you can get a 50% deposit bonus on that. Most exchanges are doing a 10 or 20% deposit bonus. So that's a really big deposit bonus on $100. They're offering 20% deposit bonuses up to $1,000 and 10% deposit bonuses up to $20,000, guys. Most exchanges will do 10% deposit bonus up to $10,000, but not up to $20,000. So really, really good initial deposit bonuses. You'll get those really good discounts on the trading fees. If you're interested in signing up, link is in the description below. I've also partnered with BYDFI to create that Telegram community where I do kind of keep you guys updated on what I'm thinking on Bitcoin throughout the day. If I do see a good trade on altcoins, I'll let you guys know there. It is a private community, but it is free to get into. All you need to do to get into the community is sign up with BYDFI using my affiliate link in the description, and then deposit the minimum deposit of $100 or more. If you do that, once you do that, you can click the Telegram link in the description of this video. And in that Telegram verified channel, type in /verify and then your BYDFI user ID, and you'll automatically be put into the Telegram. And once you're in, guys. And you can also tag me, ask me in the general chat, ask me questions on things. So I think it's a win-win for everyone, that Telegram. If you're interested, links in the description below. The second partner of the channel is going to be NAMI Trading. And NAMI is this bottom momentum and money flow indicator down here, which I use for my entry and exit confirmations on my trades. So, for instance, if we are going to kind of see a corrective move here and then come up to that 786, and I see some nice bear divs coming in on NAMI with our money flow bear divs as well, maybe we're going to make a lower high in money flow, then that gives me my confirmation to look to enter a trade here. Because first we look at price action. We find our zones of confluence where we're interested in trades. But then I don't necessarily enter the trade unless I have proper confirmation. And so for me, NAMI has been an invaluable tool to help me find the confirmation to stay out of bad trades and to get in the ones that are more probable to play out. I have partnered with NAMI to get you guys 50% off. So if you click the affiliate link in the description, and then when you're checking out in the promotion box, type in Divine50 and you'll get 50% off. Both the discount code and the link are in the description below. The second non-KYC partner of the channel is going to be Blowfin. And I partnered 2 KYC exchanges and 2 non-KYC exchanges. So Blowfin is going to be the second non-KYC exchange. They're offering some really good net deposit bonuses as well. You can see here 10% on a $10,000. Offering a 20% deposit bonus on $100, but they're also doing a VIP one for 30 days. And if you deposit just $5, you can get a $10 voucher. And this is for the first 300 users only. So if you're interested in using Blowfin, it's a good way. If you sign up using my affiliate link, it's a good way to say thank you to the channel to help me out. And you do get some rewards there as well. And then lastly, the 2 KYC exchanges I'm partnered with are Bybit and MEXC. MEXC offers that 10% initial deposit bonus up to $1,000, and Bybit is offering up to $30,000 in futures trading bonuses, depending on how much you trade within those futures markets. All right, that's about it for the partners of the channel. That's about it for Bitcoin. Really, there's not a lot to talk about, guys. For me, I am waiting for something to happen within this range. You know, coming up and rejecting at this general area of the 0.5 Fibonacci and your anchored VWAP, and then seeing the first move down be an impulsive move down, does tell me that whatever happens here is overall going to be corrective before seeing a bigger drop to the downside. But we just don't have good confirmation yet. And like I said in yesterday's stream, this pump looked a little bit aggressive to be the end of it, where we just reject here and drop straight down. So could we be in a little bit of a grindy range for a little while? Yes, I think we could be. Still looking for those bigger moves, the bigger breakdown out of the range. Or if we do start to break up above this purple box of resistance, I would be looking to take out last Wednesday's highs and hit that anchored VWAP. And then we would see from there. If we get the trade, if we get the confirmed swing failure pattern, we enter short. If we don't, we sit on our hands and wait. Let's move on to Ethereum. Now, what I was saying to you guys earlier in this video is some of the altcoins were giving better trade setups than Bitcoin. So I was focusing a little bit on some of the altcoins. And what I was talking about here is on Ethereum, and I talked about this in yesterday's live stream. On Ethereum, we had our range highs, new range highs on Ethereum around 2,200. We saw that initial drop to the downside, and we dropped to our golden pocket and our value area low. If I pull the value area, you can see that it was the value area low in the golden pocket. That's why we looked for a long right at this level. And you guys, I did tell you that ahead of time. We bounced up, but now let's pull that volume profile all the way. So we bounced, we're just rotating the volume profile. You can see rejected value area high, rejected value area high, rejected value area high. We were finally able to break out of it, but it was a kind of a failed auction breakout. Once you fall back inside of it, you expect to rotate it to come back down to the bottom of the volume profile, to the value area low. We did that. We bounced. So because we're now reestablishing price action within this fair value of the past 5 weeks, we rose up over yesterday, actually from the weekend to yesterday, we rose up and we hit the lower high golden pocket in confluence with that value area high. And as we were coming up here, we were making some pretty aggressive bear divs on the chart where we could have taken some action to short. So you can see higher highs in the price action, lower highs, confirmed bear divs. NAMI shows you those bear divs, prints them for you. We had bear divs on the money flow for NAMI. And so I was looking for shorts. Now, I didn't take the short on Ethereum, but I did on Solana because it was seeing the same type of price action. But this move down that we saw from yesterday does look a bit corrective here. A lot of choppy overlap, and then you started to get that on lower time frames, that selling exhaustion channel that I often talk about. You can see in here, we started to get that, big drop down, the big aggressive drop down, and then you started to get that choppy overlap and selling exhaustion. And on today's news and the open, CPI news and open, we did push up again to kind of back test our value area high. And so we did not take out yesterday's highs, though. You can see we front ran yesterday's highs, and we kind of saw this mini, very low time frame distribution pattern right in here. But you keep butting your head up against the value area high rejection, value area high rejection, value area high rejection. And what I would say with Ethereum is I am still looking for a short here. If we can SFP yesterday's highs, we might be seeing some sort of flat that is going to come in here. I would have liked to see it take out the highs before seeing this drop to the VWAP here. But I am still looking, and I did talk to you guys about this in the Telegram today. I am still looking for the potential of, because if we look at our golden pocket, you can see that we just barely front ran our golden pocket. Our highs of yesterday were at 2088.8. Our golden pocket is at 2089.56. And this is on the Coinbase chart, but if we stick our magnet on there, we'd be super precise here. You can see that we did front run that golden pocket just by about $1, literally by about $1. So could we come up again in this move, actually hit into that golden pocket, grab the liquidity from yesterday into our 0.65 and see a dump? I think that is a possibility. The other possibility I'm looking at is seeing this initial push up, seeing kind of a flat correction in here, maybe coming down to take out today's lows, these kind of semi-equal lows in here, into your pitchfork band at like 19, let's say 1997, and then pushing up to your 786, where you can see the top of the pitchfork band is going to be aligned with that 786 Fibonacci. And then if we look at the daily time frame, you do have a daily level that is pretty close to that 786. Your daily level is going to be coming in at 2127. And your naked daily point of control. Okay, actually Ethereum doesn't have a naked daily like Bitcoin does up there. But this would be the next level for me. And actually, hold on, daily. I have to switch this to daily. Yeah, it still doesn't have a naked daily point of control up there. But I would be still looking at this zone. If we don't SFP yesterday's highs, I would still be looking at this zone between 2127 and like 2138 as the next resistance zone where I would look for a short. And I would want to see the bear divs coming in on the chart. So if we do see kind of this flat in here and then come up, I would want to see some bear divs between Tuesday's highs and whenever we hit into this resistance on the chart, on our oscillators, on Bitcoin and Market Cipher B. As far as local trades go, very local scalping, because that's kind of what we're dealing with right now, guys. The crypto market's a little bit slow, just consolidating here. We can look at that smaller range. Let me zoom in onto the 15-minute chart. We can look at that smaller range that's kind of been developing. So you can see we broke above our pitchfork band, back tested our pitchfork band right here on Monday. And since Monday, we've been pushing up. So you can kind of pull that sideways range. And I would even go from here, this sideways range, and look at, let me hide this range so we don't get confused. You can look at this volume profile and trade this volume profile. So I suspect if we lose the VWAP here right now, we are probably going to rotate at least down to the POC and grab the lows from earlier today, or those higher lows from earlier today, and come down, maybe even sweeping these dual lows. And yes, you did technically get a liquidity grab of Tuesday's low earlier today. So it's not equal lows, but I would still look for us to come down and potentially sweep these. I'm more interested in shorts, guys. I'm more interested in the shorts. So for me on Ethereum, seeing the double top you can see on this high here, I actually do have an alert set. Maybe that one's hidden with the alert set, but if we do come up to that area, let me delete that and set this one. You can see we have an alert there. So if we do come up and SFP yesterday's high into that 0.65 golden pocket, and we have some bear divs on the chart, I'll look for the short if we do lose it. So remember, with a confirmed swing failure pattern, pierce above, reject. Once you start to lose it, you can enter short. Stop goes above the local wick high, and I would at least be targeting down at the bottom of the pitchfork band. That's a really nice scalp, but this honestly could turn into something much, much bigger, where we even come down and break all of our liquidity here. This liquidity trail that has been forming on Ethereum. Right now, I'm playing everything as scalps, at least for TP1 and move stop loss to break even. I'll let the shorts ride a little bit longer because I do think there's a potential breakdown coming on Bitcoin and on the altcoins. And if I see any long opportunities, I will play them as scalps. TP1 probably 50% at the first resistance, and then let the rest ride just in case it decides to continue pumping. Is new daily levels here on Ethereum. I mean, we have the daily above us that I just talked about, and then we also have that daily that's coming in at 1936-ish. It's closer to 1937, that 1937 daily level. Yeah, and we honestly, there's not too much else down in this zone. So for me, the daily level's down there, and that's going to be close to your 886 Fibonacci. So if we pull a Fibonacci retracement from the weekend lows, and remember, guys, weekend lows often do get taken out, so keep that in mind, to the highs that we made yesterday on Tuesday, and we turn on that 886, you can see that 886 is going to be near that daily. And 886s, especially in these sideways choppy ranges, the 886 does give you reaction. So a potential zone for me to look for maybe a scalp long if we are coming down there with bull divs on low time frames and corrective price action. I would look for a potential long there, but honestly, I'm not too interested in that. More interested in the highs of the range or these liquidity grabs of Tuesday and even the weekend low, grabbing the liquidity of that weekend low. All right, but that's about it for Ethereum. Overall, on the higher time frames, I talked about this last week, so it's kind of review, but we're just chopping around within this, in and around this larger pitchfork band. And what I want to see here is, I do think that this is a corrective range within this pitchfork band and that it is going to continue. So you can see we kind of had that corrective range above the midline. We broke down to the next level, which is the pitchfork band. We've been chopping around within the pitchfork band. I do think we could see a breakdown to the bottom of the pitchfork, which is also going to be where that 4-year long range value area, or excuse me, point of control is. If we look at our 4-year long range point of control, you can see that that is going to be showing up. Let me point of control down there. And then we also have a weekly and a daily level down in that zone as well. Weekly level. We have a daily level down there. So that's and in between, you can see we do not have a lot of support in between. So I would expect that impulse to continue down to that area. And in that area is where I'll really start to be looking for those nice swing long opportunities around 1600 to 1570. Okay, moving on here. Let's move on to Solana. Now, Solana is one of the ones that I did end up taking the short on yesterday. So first off, we did get that nice impulse down. 1, 2, 3, 4, 5 here. Nice little impulse to the downside after taking out the range highs within this sideways and up corrective range here. This guy that we've been in for the past 5 weeks. And after bouncing from our value area low, we did, and I believe there was a golden pocket in there as well. If we look at this golden pocket. Yeah, it was a little bit. Yeah, a little bit above, a little bit below the golden pocket, but it was your value area low, and you also had these 2 internal liquidity grabs. And remember, guys, in sideways ranges, liquidity and volume is the most important thing. I believe there was something else down there. Maybe it was a naked daily point of control as well. No naked daily point of control there. But we did get that kind of corrective grind up from that weekend low up to back test the value area high. So once again, just a rotation of the volume profile. Deviate the highs of the volume profile, you fall back inside of it. You kind of expect to kind of rotate back to the bottom. We did. We bounced from the bottom, and then if you can reclaim the POC, you expect to come to value area high. And if we look at our golden pocket pulled from that range high to our weekend lows, golden pocket was right at the value area high here. And that is where I was looking. If we were developing those bear divs as we were coming up to that high, that is where I looked to enter short, and I did enter short there. I told you guys this in yesterday's live stream. Now, I'm still in that short, but I have taken a 50% profit on that short. If we do take out the highs again, I will even look to potentially re-enter that short again. But as we were coming up to those highs, you can see kind of this channel-y structure that we had in here. And we saw the bear divs on the chart, Money flow was draining out on NAMI. Market Cipher B's money flow did still look pretty strong, but once we started to reject, I played it as a scalp. That's why I did take profit, guys. Once we hit this POC, I did take some profit on the scalp short opportunity because there was a potential that we could have dropped. The same thing though, guys. So anytime you see an impulse down to start, you expect a lower high and a corrective move here before potentially dumping in a wave 3. And this push up from Sunday to Tuesday didn't look like a very nice 3-wave corrective move. It looked like kind of one choppy channel in here. So I was looking, we want to see if this is going to potentially extend to where this is like an A wave. We get that kind of 3-wave move and a B wave before coming up in a C and maybe seeing some sort of flat in here before seeing that dump to the downside. But I'm just trading the range. So trade the range until it breaks. If we do SFP yesterday's highs and fall back underneath the volume profile, I'll look to re-enter the short because my stop is at break even at 88.6. If I get stopped out, I'll look to re-enter the short again if we get a confirmed swing failure pattern. Now, to the downside, we do have some interesting support below us. I do like this $77 area of support. Because if we pull our large range golden pocket from the lows of the range which is around $67, to our highs of the range, which we created last Wednesday, March 4th, at $94. Our macro range golden pocket is coming in at like 77.6 to 76.8. You can see that we do have some very nice liquidity resting into that golden pocket. And in sideways ranges, these liquidity grabs are crucial. And anytime you see a liquidity grab into a golden pocket, that is a prime setup to look for. Another thing that we have in there, if we turn on our naked daily points of controls, we do have we have two naked dailies close to it. We have one that's at 78, a little bit above it, but we have a naked daily point of control right at that 0.65 Fibonacci at 76.8. We have a naked daily point of control in there as well. So pretty significant support, with volume support being a naked daily point of control, liquidity, a liquidity level, and a macro golden pocket. And if we are going to start to dump, maybe see that move up, start to dump, I would at least look for a scalp long to probably back test the value area low before continuing down if we do reject there. So scalp long opportunity, though, at that $77 area. And then other than that, I'm really not too interested in anything else. We are above the anchored VWAP from the lows. You can see earlier today it kind of acted as support, and we are chopping above it. But I'm not looking at too much else. If we look at the fib retracement from the range highs to those weekend lows, and we turn on our 786, your 786 is going to be near that daily level. And so I guess that if we don't SFP yesterday's highs, the next level I'd be looking for is that $91 786 and daily level up there. And let's see, is there a naked daily? No naked dailies in there. All right. So that I would potentially short the $91 zone if we do see kind of this three-wave corrective move up there, and we're creating bear divs between the A wave highs and your C wave highs in here. And other than that, guys, not looking at anything else in here. So we just want to see if this we want this range to resolve itself, and eventually it is starting to get mature now, and eventually it's going to start to resolve itself. Money flow still looks pretty bullish here, just crossing into the green on the 2-hour on NAMI and trying to pop back up into the green on, 2-hour on Market Cipher B, and trying to pop back up into the green on NAMI. And if we look at our 4-hour chart, it's just about to cross into the green on Market Cipher as well. We are setting up for potential bear divs, though. If we do continue to rise here to take out the Tuesday highs, you can see we would have some nice bear divs confirmed on the chart. And that's why I'm going to be looking for the swing failure pattern. 8-hour chart. Yeah, I mean, not too much. What I will say on the 8-hour chart, when we did reject yesterday at that golden pocket value area high, we did print in a hidden bear div on NAMI. And that is a continuation pattern, guys. So when you have that initial drop in an impulse, a lower high, and you print a bear div, that does mean you are likely to continue that trend of lower low now. So that is something to keep in mind. All right, moving on to SUI, excuse me. Moving on to SUI here. Get rid of this. SUI is chopping pretty nicely at the lows. Remember, this is our POC. Let me zoom out of our accumulation range. So we have pretty much two major ranges on SUI. We kind of have this bottoming range in here, and then we have this upper range in here. Kind of split in between two zones. Bottom range, upper range. And we broke the upper range down. We even back tested the value area low. If you look at that, we back tested that value area low pretty much perfectly to the exact cent and rejected. And so we have now, the market has now established that the fair value for SUI is not in this zone, but it's now back in its lower zone of balance, which is between $1.46 and all the way down to about 56, 57 cents. but we're chopping around the point of control. You can see this range of the past 5 weeks has been around the point of control of that accumulation or that lower zone of balance. So for me, it is a major support level where you could see this thing start to form an accumulation pattern in here before seeing a rise to the upside. But once again, I do like the way from our highs of this cycle, I guess in some ways your all-time highs, we have that 1, 2, 3, 4, 5. I'm looking really to bottom out around that 57 to 57 cent area to 64 cent area. So I do think this range could break down, but we within this bigger 5-wave impulse, wave 1, wave 2, wave 3. First of all, it looks like our wave 3 is not done. So if we're going to look at this push down, the wave 3, you can see that we start the grind down with this channel structure that I often talk about in multiple 1-2 impulses, right? So you have a 1-2, 1-2, 1-2, a multiple 1-2 impulse or a triple 1-2. You get your big third wave. This was our first 4. This was our first 5. So could we see another 4, another 5, and then another 4, and then another 5? You need kind of those 3, 4, 5s to come in now because we had 3 1-2s in here. And that would just finish your bigger third wave. And the lows that we created that Thursday are the lows of the range. So I do think this range that we've been in for the past 5 weeks could break up a little bit higher. We could break up to the golden pocket at $1.59, pretty much $1.55 to $1.59. We could break all the way up to this golden pocket before seeing the rejection. But for me, for now, I would play this little range here, and we are not really seeing any bull divs in here. We're actually seeing a bit of a triangle consolidation. So let me hide this volume profile. And if we look at kind of what we're seeing in here, we could pull this something like that. Pull this. Something like that. You're seeing that symmetrical triangle, which, by the way, guys, is a continuation consolidation pattern. So if you dump coming into the triangle, you do have a higher probability of dump coming out of it because it's just a continuation consolidation pattern. It's a continuation of the trend. In this case, our more macro trend has been bearish. But in these symmetrical triangles, you do see a lot of traps for retail. So a lot of retail's shorting right now, shorting the trend line of the triangle, hoping for that breakdown. You will see the market makers push it up to at least grab the liquidity of the highs of the range. Then everyone thinks the triangle's breaking out to the upside. Oh, we're going to go shoot way up. You grab the liquidity of the highs of the range only to finally dump and have that play out. So that is something I would be definitely watching for. And if we zoom in, let's zoom in onto the 4-hour chart. We are still finding resistance on this trend line, on this consolidation. And let me make sure this is, yeah, that's about as spot on as you can get there. Let's see. And that is where I would say the bottom trend line looks the best. A little bit of a deviation here. And for me, I really wouldn't be trading much. You can pull your volume profile for this range. We are at the value area high of the range. We are kind of creating what looks like a distribution pattern, an internal distribution pattern. You could say, left shoulder, head, right shoulder, or, tap 1, tap 2, tap 3 in here where we're about to roll over. We do have the bear divs on the chart. So you can see from Tuesday's highs to today's highs. Actually, it's not bear divs, excuse me. We do see that bearish trigger wave though. And we did see the bear divs on NAMI as we were coming into that high of the triangle on Tuesday. Now we have that bearish trigger wave rejecting from our local 786. Rejecting that local 786. For me, I'm not really interested in anything on SUI. The value area low is going to be coming in around the bottom of the triangle. And could we see that bounce, give us one more bounce down here? Sure, we could. You could see this as like an A, B, C, D, E, and then maybe this is going to break down now. I mean, I would want it to break down relatively soon here, but we might see at least some sort of scalp long opportunity here before the big breakdown. Looking at our levels within the triangle, we do have that daily that's going to be coming in right around the value area low. And then if we look at our important volume levels within this triangle, the only naked daily point of control that I would be interested in is this guy here at like 93 cents pretty much, because it is going to be below these local lows of this range. This range has been going on since Monday. So this is our range that we're trading since Monday in here. So if we do come down, maybe grab both the liquidity of both those lows, I would want to see a reclaim of that POC pretty quickly. But you got to be careful there, because that is also kind of your neckline, right? Or your breakdown zone for that distribution to kind of play out. It is liquidity, though. We do have that liquidity trail here, and that liquidity could, once we sweep that liquidity, we could see a bounce. Really, I'm not too interested in it. We could see some bear divs coming in if we do make one more high and take out Tuesday's highs. You can see we're setting up very nicely for some bear divs. I would want to see an SFP of that high, and potentially an SFP, potentially sweeping all of these highs of the triangle, that retail trap where you come sweep those highs and then start to drop. So I would look for the SFP of the range highs at, what is that? At 104.92, pretty much 105. If we do get the SFP of 105, we can actually set an alert there. If we get the SFP of 105, that would be something I would be taking into consideration, because that could give us our big drop all the way down, at least to 74 cents where we have liquidity. But that's about it for SUI, guys. Nothing too much for me here. Now, Say has been really bearish, guys. I actually think Say's a really good project, but unlike a lot of the altcoins, you can see Say is just continuing to slow bleed to the downside. And even over the weekend, we lost our value area low of our 5-week long range. We back tested that value area low and we rejected. So because we rejected on the back test of the value area low, the bearish back test, we do expect to come take out the local lows from Tuesday, or from the weekend. Let's see, that is from, Sunday, Monday. Really, it's from Monday. But I do expect us to come down and take out those local lows because the bearish backtest here. And we're just chopping within this range underneath our pitchfork. So let me go ahead and hide the range here. And you can see here on the bigger pitchfork, it was holding, we rejected the upper band, fell down, saw some bouncing from the lower band, but we did see a little bit of support coming at the bottom, but since we've lost it, we are kind of rejecting it. Now, I do like the way Say is, first of all, Say, at least on the Coinbase charts, at pretty much all-time lows here. And we are starting to see that slowdown. On the more macro time frame, we are starting to see that slowdown of the price action. You're starting to get a bit wedgy in here. And when you see this wedgy price action come in, you really want to wait till the money flow starts to bottom out and you do start to create some bull divs. But you can see, at least on NAMI already on the daily time frame, we're seeing the bull divs. On Market Cipher B, within this zone, we're seeing the bull divs come in. So for me, Say actually looks better than most coins for a long, because we're seeing daily bull divs come in. But until we start to see some sort of sign of strength in here, I am not looking for a swing long, because if Bitcoin breaks down, Say is going to continue to break down as well. On the weekly time frame, you are seeing the very slight bull divs confirmed on the weekly on NAMI, with money flow about to cross up into the green, maybe the next 1 or 2 weeks. And then on Market Cipher B, you can see we have a very slight weekly bull div and money flow starting to bottom out. So it's starting to look enticing here, guys, for a pretty nice long. And what I'm looking for on Say is really a break in market structure, right? So when you're unsure, you want to wait for that break in market structure. And we had our initial kind of chop in here, 1, 2, 3, kind of got your running flat for a 4, I would say. And then you have all of this could be part of your 5th wave, which could be a contracting diagonal in here coming in. But we're starting to see, you see the initial aggressive drop, and then now we're starting to kind of go sideways here. And this sideways price action is that selling exhaustion that I like to see. Because we did reject that value area low of all the price action underneath the pitchfork, that range, we rejected the value area low. I am looking to take out the lows from Monday. But if we do take out those lows from Monday with some bull divs on the chart, it could even give us a decent long position just to backtest the pitchfork up at near the value area high of the range. So yeah, I would be looking for that potential 786 value area high backtest if we do get another drive of bull div coming down, taking out that low, getting back above it. I would look for the long, so we can actually set an alert on the low at 6137. So there, SFP long, okay. And if we get that, I would even look for, depending on the risk management here, even to TP1 on the back, taking the liquidity of last Wednesday's highs. Say looks really bearish, though. I don't know exactly what's going on with the project, why it's continually dropping so aggressively. But as far as technicals go, it is starting to calm down on the dumpage, and it just is looking technically like we could see a reversal soon, like a more macro reversal on this thing. I would like to get back inside of our pitchfork. I would like to get back above really 76 cents. But even to see a long from the lows to 76 cents would be a really nice trade. And then if we do start to reject up here, we could look for the short to continue bringing down. All right, levels, daily levels within here. We are not really seeing any until we get up to that purple box of resistance. So I think I already have this daily level marked out on the chart, but you can see that daily level coming in at 76.39, which is where your value area high, your 786, and the back test of the pitchfork is. Now, by the time we get up there, the pitchfork is no longer going to really be in confluence with it. I guess it still could be, yeah. So this zone for me is the big zone to be looking for shorts. 76 to like 77 cents. Yeah, and potentially, once again, setting up for nice bull divs. If we can see that move down, get those bull divs on the chart. Maybe we come down here, get some local bull divs as well. Money flow's kind of been curving up pretty nicely here. And this is all on the condition that Bitcoin doesn't really start to nuke. But that's it for, say, moving on to XRP. XRP is just chopping. Once again, we kind of did reject from this resistance box. Now, this resistance box was an old resistance box, so I'm going to delete that. But we are pretty much just ranging sideways now at the bottom of our channel. So if you remember the last time we covered XRP, we covered it in the live stream a couple times last week, but we also covered it in one of the videos last week. And we did bounce from our golden pocket, and it was a value area low at the time as well. Golden pocket value area low, grabbing all this internal liquidity. Remember, guys, in sideways ranges, liquidity trails like this are important. We saw a nice bounce from that. We bounced up, and we pretty much rejected on our 786 lower high. Perfect rejection at the 786 lower high. Could we be forming, and I'm going to get rid of this now. A triangle in here. That's what it looks like to me. We look like we're forming some sort of symmetrical triangle. Yeah, maybe even something like that, where you do have a couple wicks past it and then, you know, front ran it a little bit here. Maybe just pull this down just a bit. But remember what I talked about on XRP. Let me hide our range for a second. First off, we are at the bottom of a bigger channel, that bigger descending channel from the all-time highs. So this was our upper sideways range that we were in for a year. Very clear sideways range up here. And unfortunately, looks like we distributed down. You can see we rejected from that POC. We finally dropped after rejecting from that POC. But we're looking at this trend, these two lower highs, your all-time high and then your lower high here, and we connected to that October 10th low, that crash low, and this is our channel. And you can see we were in the upper part of the channel for a while, lost it, and now we're grinding towards the bottom. And when you see this grinding towards the bottom of a major channel, you could see a big move up. I don't like how this, from our lows from a few Friday, February 6th, this is a three-wave corrective move, meaning it's a corrective move, just that, a corrective move, not an impulsive move. And because it was a three-way corrective move where we also backtested our prior lows of the range, not the value area low, but your prior lows, and you did reject, I do expect us eventually to drop to take out those lows on February 6th. So in other words, to make new lows on the chart. Could we see a rise up within this kind of choppy price action here first, maybe up to your channel midline around 162 before seeing the drop down? I think, yes, there's a possibility of that. For me, I'm not really too interested in anything within this range for XRP, but if we do come down to our value area low, let's zoom into the 4-hour chart of this little consolidation over here. You can see the value area low of this consolidation range is coming in at 107. And so to see us make new lows into that value area low would be kind of nice. And other than that, there's really not a lot of support until you get down to like 70 cents. We really hope we don't come down that far, but it's a possibility. This range is what I would be focusing on for now. The grinding that we're seeing at the bottom of our bigger descending channel. So you can pull that volume profile, and yeah, we keep rejecting from the value area high, rejection from value area high. We keep bouncing from value area low for the most part. And you can see the value area low is going to be coming in right at that triangle support. So could we see another bounce locally around your local 786 Fibonacci to the downside at 134.7 or like 134.8, which is going to be where your value area low is. And if we look at our daily levels, we do have a daily level of support very close to that at 134. And then let's go ahead and look at our naked daily points of controls within this range. Okay, no naked daily points of controls down there. Let's see if there's a naked weekly. Nope. Okay. So pretty much for me, I would wait a little bit. You know, yes, if you come down to like 134 to 134.7, this zone is a zone where I would potentially be interested in a long position. But other than that, I'm not interested in anything on XRP. And until we, as far as shorts go on XRP, I really would want to see the fake out of this triangle. Say we see this kind of three-wave corrective move down to your 786 and we get the long. I would want to see a fake out and sweeping of this high, and this high together, or at least sweeping one of them. But that bigger purple box above us is really where I'm kind of looking at. Now, the value area high is obviously shifted down quite a bit, but you do have a naked daily point of control and your golden pocket up there. So if you look at from those range highs to our lows that were created after that, your golden pocket is in that zone. Golden pocket value area high, and it would be the liquidity grab of all these triangle highs into that golden pocket. you can see your naked daily point of controls right there as well. So now that our value area high is shifted, we can actually adjust this box. Right there. So that is kind of the zone I would be looking at. 151 to 153 is the big short zone, and it would sweep up all of those lower highs. It would sweep up this guy, and this guy together. Seeing that kind of retail fake out, right? You have the symmetrical triangle. Maybe we bounce from the bottom once again, kind of come up here, sweep them all before seeing that bigger rejection. I think if we look at including this price action, that's where the value area high comes in, but it's even shifted down from there. But I remember last week we were looking at that. Depending on how you want to pull the range, if you include this little bit. Look at this, though. You can see that value area high, if you include this little section here, is coming in right above the liquidity at 150 pretty much. 149, 150, 149.5. So we can set an alert on this daily level at 134 if we are getting some bull divs as we come down there and we're seeing that 3-wave corrective move, seeing kind of something like this coming down into that, I would be potentially interested in taking a scalp long there. The thing is, if there's better opportunities on better coins, better trade setups, I'm going to take them instead. So just that's what I'd be looking at for XRP. Lastly, Chainlink here. Chainlink was one of those coins that I talked about on Tuesday's live stream where we did have that really nice resistance short coming into your value area high, your golden pocket, and it was also the back test of your pitchfork. And just forming kind of this choppy sideways range as well. You could include this little section into the range if you wanted to, but it's technically part of the impulsive move down. You can see all of this looks very impulsive to the downside, and this is when we start to range sideways. And after all, this tool is a fixed range volume profile, so I like to use it when the impulse ends on the actual range. But you could pull it either way. Both are valid. I would say that the first profile I had is a little bit more valid, but you can see they're very similar. Value area low and value area high shift a little bit, but for the most part, they're relatively close. On Chainlink, we are below the pitchfork. So that pitchfork was acting as support for a bit. You can see support, 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 kind of creating that triangle once again. This sort of triangle that we were seeing in here. And it broke to the downside. Once again, those are continuation consolidation patterns, right? Dump coming into it, you have a higher probability of dump coming out of it. But that was also a key loss of the pitchfork. Since then, back tested the pitchfork, rejection. Tried to get back into it, a little bit of a failed auction, rejection. Try to get back into it, just grab the liquidity of the range highs, rejection. We also were looking for shorts there as well. So now we're back underneath the pitchfork, and I do have to say the move down from those range highs does look impulsive. Wave 1, wave 2, wave 3, 4, 5 here. And so I'm expecting a lower high before creating another lower low. So we are rejecting from that zone, the golden pocket, the value area high, and the pitchfork band. Just like Ethereum, though, Chainlink did almost take out yesterday's highs today. You can see we got very, very close. And I don't like that. So maybe we see some sort of push up to grab them again before seeing that drop. But either way, I'm looking at this general zone as the area to look for the short. If you entered it, I would stick in that. And if we see that 3-wave move, then we could see a move up. So pretty much same concept as Bitcoin, same concept as Ethereum. We have our smaller range in here. Within the bigger range of the past 5-6 weeks, if we zoom in onto the 1-hour chart, we are developing a range, a small intraday range or intra-week range between the point of control and the value area high. You can see this guy here. So we've obviously fallen back inside the volume profile for the day. The value area low at 890 has some liquidity there from earlier today, that kind of flash crash we saw earlier today. And it's also going to be around your 786 Fibonacci pull. Actually, it's going to be your 886 is going to be right in there. That could be a zone if we're going to continue kind of grinding sideways between the point of control and the value area low. You might see a bounce at 890, but I'm not interested in it. You know, that could be a little scalp zone because you have a liquidity into value area low into your 886. For me, I'm not interested. What would be better for me is you can see, let me just hide this small range. We have a bunch of semi-equal lows in here. So we have the low at 884.7. Then we made a slightly higher low at 886. And then we made a slightly higher low at 886.7. So I would like to sweep all these into your point of control. If we do get that move down right now, sweeping all three of those lows into the point of control. And then if you start to get back above them, I would look potentially for a long to sweep your semi-equal highs, right? You also have semi-equal highs in here. You can see 918.4, 917. So we have some very key liquidity pools building at both the highs and the lows of our local range. Other than that, for Chainlink, I'm not interested in anything else. Yes, the 886 is at the value area low. For me, I'm not interested. I'd rather grab liquidity. Take that trade. Overall, higher time, zooming out to the higher time frames, we still do have a couple fresh daily levels. So we have that daily level coming in from the weekend at 851. Let's see here. Let me throw that right on there. Yeah, 851.4. And then we have the daily that's above us still at 935. That's, yeah, weekly opens also there. It's not confirmed yet, obviously only being Wednesday. And then if we look at our naked daily and naked weekly points of controls within this zone, this range, naked dailies coming in at 942. And I would look at this one down below the value area low at 831.5. 831.4. Okay, yeah, so that's about it. For me, coming up to that daily level and that naked daily point of control could be a bit interesting because if we pull our Fibonacci retracement from those last range highs at 963.7 down to the weekend lows that we had, those Sunday weekend lows, our 786 is going to be in that zone. And if we break above the golden pocket, where's the next level you're looking to shoot to? That's 786. And with a daily and a naked daily in close confluence, that would be the next short opportunity. Now, for me, because we are seeing an impulse down here, right? You have your impulse down from the range highs. If we do see some sort of three-wave corrective move, A here, a B flat coming down and bouncing from the POC at 882, seeing that C wave come up to that purple box of resistance, that would be a nice bigger three-wave corrective move to look for that big short. So what I'll do here is we can set some alerts. We'll set an alert on this last liquidity grab. If we come down and see those triple SFPs into the point of control at 882, I'll look for a long from that. If we do not SFP Tuesday's highs at the value area high, then I would look for coming up to the daily. So we'll set up that alert at 935 at the daily. But other than that, not interested in anything else here, guys. So that's it for today. I will be streaming tomorrow at 3 p.m. Eastern Standard Time. There's been another shift in daylight savings time, so 3 p.m. Eastern Standard Time. Please come join me. We'll cover Bitcoin. We'll cover some of the altcoins. We'll try to get into some scalp trades as well, guys, because it has been really boring this last week as far as bigger price action. So we'll try to get into some scalps if it's going to be slow price action. And I will see you tomorrow. Please hit the like button on your way out. Please come join me tomorrow and have a good night.